due to changes adopted by the board and administration that became effective 1/1/25. As of January 31st, 25, 7 months, just to be clear, this middle column here is showing 7 months, which is 7/1/24 through 1/31/25, whereas on the right side is showing a full 12 months, but it's a rolling 12, showing from February 1st, 24 through January 31st, 25. So that's not a projection on the right. It's not any plan year or fiscal year. It's just showing a rolling 12 to compare that to. And I'll direct you to the red box, which shows that the total health plan cost is $516.94 per member per month. As of 1/31/25, we're showing that the plan is running at a surplus of $4.9 million. It would be $3.9 million deficit if we wouldn't have had the transfer from the general fund and the fund balance, which is listed right down here. And then that has been addressed for, it's been discussed and will be addressed for fiscal year 25-26 by adopting actuarially sound premium equivalent rates that we just recently discussed.
Let me stop you there for a second.
Yep.
So not only does it say it, but it's underlined. You're showing that we have a surplus, but I want you to expound a little bit on the fact
Sure.
that it's only a surplus because we've transferred money from the general fund. It is not a surplus.
Yep.
It is a surplus, but let's be clear. Let's just make sure that we're clear on record. And you stated it, and I just want you to expound on it a little bit
sir.
more. How that happened, why that happened, as to where we are.
Yes, sir. So your ending fund balance was $2.2 million. We ended up finding out about that amount back in September. But back when you adopted your rates in, I believe it was your May meeting, you voted to transfer $6.639 million from the general fund to the Fund 85. So that is where we're sitting at a surplus of 4.9. Now, I do want to be clear. We're not saying the year's going to end on a surplus of 4.9. Yeah, okay.
Well, and back to Jeremy's point, it was a transfer, so it wasn't included in those premium equivalents. You chose to basically have premium equivalents, the employer portion and the employee portion, to be less, and that's what required that transfer.
What we can't have is we can't have a report out in the public that states that we have a surplus in our insurance fund. That is not an accurate depiction of where we are, and so that's what I want to make clear.
Well, and so this is showing also, by the way, just at 7 months. So what the reason, just so you know that why it is looking more, and I'm glad you brought this up, was we just had we're recognizing some rebates that came in, but we may not have some other, the other expenses that are coming out. And that's why it is imperative that I really want to make sure everyone understands this is a point in time. This is just the end of January. We also know that 12 months of claims is cyclical, and we're about to hit, people right now are in their deductibles and so on, but once people get out of their deductibles, we'll start to see more expenses to go through. We do expect that to be at a zero at the end of this piece. We're not
certain.
Well, not certain, but.
Okay, so I think what Tony's doing is he's kind of expanding upon some other areas of the budget, but I think what you're homing in on is the fact that when you come into your premium equivalent, you want to be certain that we're using the appropriate numbers, or at least people understand that there was a transfer made. And point well taken. On the monthly reports, we now show, whatever that recommended funding is going to be for the future. If you elect to do anything differently, we'll show what your numbers are. We'll true up your financials, but we will always show what the recommended funding level is without any transfers.
If I could, Matt, or Superintendent, someone, we made that transfer when we did. Why did we make it at that time as opposed to on the back end?
Just let them answer.
That number is more of a hold in the budget to make sure we don't go negative. The actual transfer can be, I don't know if it was physically made or not. If they're running out of cash, which may be the case, we had to transfer the money so that the checks were clear. But basically, that was just the amount that we thought we needed to make sure that the fund didn't go under water.
Okay, thank you.
Any other questions?
Okay, this is basically just a slide to answer some of the questions maybe that was at another insurance committee meeting or a board meeting, but there was a lot of questions around the coordination of benefits on what happens and who's what we call primary carrier, meaning who pays the claim first and then who pays the claim second when somebody has dual coverages. This is a little more than what you asked for, but it's something that you certainly can review. It'll tell you what happens when somebody just has Part A coverage, which is hospitalization. It'll show you what happens when somebody has Part B coverage, which is outpatient. It'll show you what happens when somebody has A and B, which is inpatient and outpatient coverage, but doesn't have Part D coverage. And then you have your retirees with Medicare's A and B, and then with the dependents. But more specifically on the next slide, what you had asked was what happens when a provider has opted out of Medicare. And it indicates here that those doctors that don't accept Medicare and have signed an agreement to be excluded from the Medicare program, the opted out provider must give the patient a private contract describing their charges and confirming that the patient understands that they are responsible for the full cost of services and that Medicare will not reimburse them. When Medicare is primary and a claim is received without a Medicare EOB, the claim is denied. Then the question was asked, well, there are providers out there that aren't credentialed with Medicare. And so what we did is we listed what those providers are because there's certainly not very many of them. Some of them, as you can see, are acupuncturists, living assisted facilities, etc. And what it indicates is that Blue Cross pays primary benefits on claims from Medicare that are non-credentialed providers. And that's the list of the providers for your reference.
So small point of clarification on this. When it says Blue Cross Blue Shield pays, that's LPSS but Blue Cross Blue Shield is just the payment provider, right?
That's correct.
Okay, I just want to be.
No, I'm glad you made that clear,
I
Rick.
just want to make sure, like,
Mhm.
because I know we have said, I think there's been tons of stuff thrown out about it. I just want to make sure. That's
They
clear.
process the claim, but you provide the funds to release the checks.
Fantastic, thank you.
No, thank you. Okay, this is our service and administration service calendar. This is what keeps us on track and sets expectations for the year. Primarily, this calendar is created to create efficiencies and cost-effective measures in which to help reduce overall claims costs but improve patient outcomes. In March, what you'll see is the TPA market check was released. Some of you might ask, what is that? Again, when referring to the people who are managing your plan, currently it's Blue Cross. We've gone to the market to several third-party administrators and vendors who can do the same thing for you. Maybe their model's a little different. Some of them allow you to direct discount and enter into contracts with independent providers, and others have different networks that the employees would choose from as it relates to their benefits. It's an extensive check, and I think it's something that I understand that you haven't done for many, many years. We would recommend that you at least do it every 3 to 5 years. Questions on the service calendar, we can certainly go over them, but this is what we're on a regular, ongoing basis providing in the way of management of your overall plan.
That concludes our prepared presentation.
Any questions? Lots of information in the appendix for easy reading.
So, for the market check, when do we expect that to come back?
You know, Roddy, I don't know exactly. Well, let me look at the calendar. One thing I know is a couple of those vendors have asked for extensions to respond.
Okay.
When that happens, we allow everybody an extension. But what I will tell you without giving you a date is that we're not gonna back anybody up in the corner. It's very important for you guys to understand what your options are and have enough time to be able to review that.
Yeah, because if it has.
If I had to guess, a month, 6 weeks, something to that nature.
Okay. Jennifer, do we know, so you said it was 10 years ago, was about the same time, last time we did this?
We don't know exactly. We know it's been a long time.
Who's been here the longest? Who can, I want to be curious, I want to see what that discussion looked like last time, so I want to.
I couldn't tell you historically what the discussion was. At that time, Ms. LaBeouf, is that when we did the 2016 Blue Cross Blue Shield, or when they were reassigned in 2015 or 16?
I'm just curious, because I don't know what the process looks like. I'd like to.
I went back in records, and the last full, complete RFP, I'm referring to it as a RFP, that's incorrect. It's a market check. The last time that was complete was in 1996. Now, our previous consultants, in particular, I've been with the district for at least 10 years, and I do know that they have done periodic checks, but not to this extent. This market check is quite extensive, asking a lot of analytics and information that's going to take those carriers some time to put together that information. It's not just a simple internal one, it's an in-depth one.
Okay, I appreciate it, thank you.
Tony,
Yes, sir?
so if we go back to one of your first slide,
Mm-hmm.
and we're just looking at the 7-month run. I don't know what's more important to look at, Tony, the 7-month run or the 12.
Let's stick with a 7 for the
Okay.
moment.
So that number that number shows us that the LPSS's portion of the contribution is right at 74% of the total cost. So the employee would be right at around 25%-ish. Is that, you agree with that?
Yeah, you're taking the percentage, you're looking this line right here of the 9 million?
Yes.
And you're dividing that? Yeah, that does sound about right. I'm
Okay. That's the number that's been thrown around a lot, 70-30, 75-25. I know it fluctuates because costs fluctuate, but,
because if you add the two of those together, it equals this number. So yes, so that'd be correct.
okay. All right, do we have any other questions for Gallagher? Okay. Thank you guys very much. Please hang out just in case.
Absolutely.
All right, item 2.3, discussion and or action regarding the staff report. Ms. LaBeouf?
Good afternoon, everyone. My name is Trish LaBeouf, Director of Insurance and Benefits. I just want to give you a brief recap of two staff items, the BMI dependent audit and just the educational opportunities for retirees in workshops. So just as a recap, the BMI dependent audit essentially minimized your risk by requiring employees to produce documents that certified their dependents. Their dependents are spouses and children. So we completed that during the fall, and it finalized on the 10th of January. I have results for you today to tell you that based on that audit, we completed on the, it was a estimated reoccurring annual cost savings of about $109,000 per year. So the positive is that we have thoroughly reviewed the dependents under the plan. We can certify that those dependents that are on the plan moving forward indeed should be on our group health insurance plan. And as a result of some of those dependents moving off the plan, it's going to be an annual reoccurring savings of about $109,000.
Fellow committee members, I want to say that number is a clean net number. What I mean by that is the agency's original thought, and I hope I'm not stepping out of line here, but I think it's accurate, so let's state it. The agency's original thought process was they were gonna put all of the folks on our plan through this process. And whoever did not respond by their deadline was going to be kicked off the plan, and that number was going to be the number of savings they reported to us. Had we not voted to say, no, wait a minute, now, we need to extend this time for the reasons we did, that 109,000 would be a much higher number. But I think, in my opinion, unfortunately, it wouldn't be quite as equitable as what we have here. What we have here are literally people who were on the plan, who were not supposed to be on the plan, versus people who just didn't respond in a certain amount of time and get kicked off the plan. These were people that should not have been on the plan. So thank you, that was a significant process, and we thank you and Gallagher for, your team and Gallagher's team for handling that.
My last and final informational is with regard to educational opportunities for our retirees. We do have a Humana educational session tomorrow evening, Wednesday, the March 19th, from 5:30 to 6:30 here in the boardroom. The purpose of it is just to educate our members on the Medicare Advantage plan offering with the district. It's keeping in mind that new members who have recently enrolled in Medicare can change from the Blue Cross, LPSS, Blue Cross health insurance plan to the Humana plan within 30 days of Medicare eligibility. Any other person who would like to transition to the Humana plan would have to do so during the open enrollment period. So just wanted to make that disclaimer, but I know during our last open enrollment period, a lot of members wanted to become educated on our other plan. This is an opportunity for you to come tomorrow evening if you'd like to learn more from 5:30 to 6:30 p.m. And then in collaboration with Gallagher, we've been working with them to have the Louisiana Department of Insurance come back to us on June 18th. We're offering 2 workshops, one from 10 to 11, from 10 to 11, and from 1 to 2 here in the boardroom. Again, that's just explaining your general Medicare benefits available to you. They are an unbiased party that can just help you decipher what your Medicare benefits are. It does not correlate with anything offered with LPSS or your Blue Cross plan, but we will have staff members here to answer any questions should you have them, or perhaps your Medicare Advantage plan with the Humana. So I just wanted to make sure our retirees were aware of those 2 offerings, that if they wanted to come, to please mark your calendar. And that's all of my updates for today.
How many, what was the final number of folks who went from Blue Cross plan to the Medicare Advantage plan this year?
Around 240, if I'm stating that correctly.
How's that been?
So far, so good. We've not had, staff can correct me if I'm saying this incorrectly, but it's been a positive transition. We've not had any follow-up customer service calls wanting to transition back. They wouldn't be able to do so into the annual open enrollment period. In my opinion, it's gone well. If any member is having concerns, certainly reach out to the department, and we'll work through that and help you with it. But it's been a positive transition for our members.
You said 240?
240, yes, sir. I think it was 237, 240.
So we're in the 400 something.
We had about 2 something on the plan. I believe we're around 630, 640 on our enrollment. Tony can probably correct me if I'm stating that incorrect. That's correct. Okay.
If we get any feedback from these individuals having to do with network issues, can the committee just get an email about it, a heads up, so that we could potentially have it on an agenda item? I don't foresee that happening, but if it does, could you just, of course, no, we don't need names, we just want to know information.
Yes, sir.
Members, do you have any questions for Ms. LaBeouf? Okay. Thank you, Ms. LaBeouf. All right, we'll move on to our finance items. Budget recap and timeline, 25-26 budget process. Mr. Dugas?
Yes, What I provide to you is an updated budget recap and timeline. Our first meeting is scheduled for April 10th at 4 o'clock. At that point, we will review budget challenges and opportunities that would be in the general fund that we would know about at that time. The three basic things that we currently are still not sure of are MFP staffing and the insurance subsidy, the 6.2 that we talked about, and we'll be talking about a little bit later in our second presentation. We also will have a review of the non-general fund budgets. That'll be your special revenue fund, capital improvement fund, self-funded construction, the 22-23 bond construction fund, school food service, debt service, and Cafe Beauregard fund. The next meeting will be Wednesday, May 7th at 5 o'clock. At that point, we will present the group insurance fund. The preliminary report of general fund budget summary, projected revenue and expenditures, which hopefully at that point, our goal is to have a balanced budget by May 7th. Review of the general fund cost centers and the 2002 sales tax fund. At that point, we will bring it back one more time on May 15th. All the budgets, including everything that's presented on April 10th, everything that's presented on May 7th. At that point, that becomes the adopted budget that has to be advertised and subject to public inspection, both online and here at the district office, for a adoption on Thursday, June 12th, at a public hearing at 4 o'clock, followed by a special board meeting to adopt the budget at 4:30. Any questions?
Other than maybe go over the sheet that you handed out,
That's the second item.
okay. Oh, timeline, jeez, yeah. You could have put them in all in one. Any questions on the timeline? Okay, let's move over to item 2.4, 2.5, budget challenges and opportunities, Mr. Dugas.
Yeah, so this is kind of, our first finance committee, so we're trying to set up some kind of format. So what we intend doing is going over our big three revenue items on a monthly basis and where we are in that. Currently in sales tax revenue, where our budget is $96,269,000. Currently, we have collected about $71,204,000. That's about 74% of budget. If you look at the history, most of the sales tax collections have been slightly above last year, some meeting budget, some not meeting budget, but overall, we think we're going to reach the budget, so we should be okay with sales tax revenue by the end of June is our prediction. Property tax revenue, of course, that mainly comes in January and February. We have met our budget for property tax revenues for this year. We're at 100%, a little over 100%. We project there's an additional $2.2 million in excess property tax revenue for the remainder of the fiscal year. That revenue projection was added to the general fund budget on March 13th board meeting and transferred to capital for fiscal year 25. That's to be spent on, actually, we already started approving some POs for some of those projects going on as we speak and will occur during the summer. One of the reasons we moved the money is to allow construction to occur during the summer when students are not in session and not disrupting, also for safety. The excess amount will be factored into the proposed fiscal year 25-26 general fund budget. The next one is MFP state revenue. Currently, we have budgeted $147,803,000. We have collected $104,572,000. That's about 71% of budget. There are 3 months remaining in the fiscal year. We're on target to reaching budget. However, during the latter end of March, probably by the end of this week or next week, the LDOE may adjust our MFP revenue based on the changes in student enrollment. If this is a material change in nature, we'll have to adjust the general fund budget. We'll be monitoring that very closely. During last year's budget season, we reduced MFP budget to accommodate an anticipated decrease in enrollment for the Lafayette Parish schools and an increase in enrollment for Acadiana Renaissance School and Vermilion Charter Schools. So we are budgeting that potential decrease. It has already been budgeted and taken into consideration. If you remember in the budget process, when we showed you the graphs and all our predictions in that range, we'll just know in March how accurate that prediction was. I'll turn it over to Mr. Mouton so he can talk about unexpected expenditures and budget opportunities.
Good evening, Anthony Mouton, Director of Finance. So I wanted to discuss with the committee the upcoming budget challenges and the budget opportunities. But first, I'll discuss the budget challenges. So first and foremost, if you look at the bottom of your page, I projected that the general fund budget for next school year will have a $10.3 million deficit. And if you look further down, I have some large ticket items that makes up that number. So first and foremost, let's talk about the insurance fund. So in working with the insurance department, it appears that for next school year, we may have a $10 million deficit for the insurance fund due to claims. However, we do plan to continue to budget a $6.6 million transfer from the general fund to the insurance fund for next school year. So that reduces that $10 million deficit to $3.4 million. Second, for charter schools, there is another charter school in the process of being built off of I-49 that pertains to the Lafayette Renaissance Charter Academy, and I believe it's a middle school. So again, as Matt had mentioned a few minutes ago, we did anticipate and budget for that this school year. So over the next couple of weeks, we'll find out shortly from the LDOE as to what that reduction in MFP is going to look like. But I do anticipate that we will have to pay an additional $1.2 million to charter schools next school year. And third, as we all know, the superintendent has an initiative to increase teacher salaries up to $50,000. So from the general fund perspective, it appears to be about $6.2 million for that cost. And then and teacher incentives as well. And then moving on to budget opportunities, at the moment, staff is currently working on potential staffing adjustments, and we hope that that will offset a good portion of the $10.3 million deficit within the general fund. So that's yet to be seen, but as soon as we find out what those numbers look like, we'll update this and present this to you in the next committee meeting or the committee meeting thereafter. We also see some potential savings on the insurance side with pharmacy consolidations. And this could be, several $1 million, but that's yet to be seen. And third, there's a potential for an insurance premium adjustment. Again, yet to be seen and would have to be voted by the board if that's the case. So those are your budget challenges and budget opportunities. So we wanted to discuss this with you guys ahead of time before we start the budget season, so you know what we're up against.
All right, Mr. Mouton. Just a statement on your challenges portion. It's I know it's not ironic, but it's interesting to me to see that the teacher salary increase budgeted anticipated amount is right in line with our annual deficit that we see in insurance. Actually, that number is closer to $8 million, but I get where you guys are getting the number.
Right, that's split.
I don't have a problem with this report at all, but I don't think that maybe we can put it into more perspective next time, because we saw a $7.9 million deficit in insurance, and that's the number we need to be telling people versus the 6.6. So if we could just put it into more perspective next time, but I want to thank you for putting this together. As it relates to the opportunities, Ms. LaBeouf, and then we might need someone from Gallagher up as well. Can you speak to the pharmacy consolidation potential? And I'm regretfully going to ask you to speak to insurance premium adjustment potential.
So we're working through a process right now for a market check under the pharmacy benefits as well. Just like we were speaking a moment ago about the medical. So we are working in the very initial stages with regard to that. I may have to turn it over to Gallagher to speak a little bit more on. Do you have any input?
It's been put out for RFP. I mean, I think we all feel comfortable that there are going to be some savings. Can I quantify that right now? Absolutely not, but it will be some savings. Will it be in time for you to set your budget? Will we know that number? I'm confident to say no, but we could possibly discuss maybe doing estimates and those kind of things.
We are currently working through that process as well with regard to possible increases effective July 1st. Gallagher needs to fully assess where we're landing for the current fiscal year, in order to determine the correct and accurate rates for the next fiscal year. Do you have any input?
Yeah, so we have a tentative budget for next year if no changes are made. And so we are right now preparing what we call premium equivalents or total premium rates for the district to change those rates to. That is not any suggestion at this point of where to shift that to employee, employer, and all of that. We are looking at different models for that, but that'll be once it's decided upon as far as the budget.
So, a couple of questions. So, from what I'm gathering here from Mr. Mouton is that for next year, we are anticipating a $10 million deficit. Now, here's my question to you. We just talked about doing an audit on what we are doing as far as employees. We had some people move over. We had all of the different things that the board did pass. Is all of that is taken in consideration when we are saying that not only are you going to have to put in the extra 6.6 like we did this past year, but you're going to do it again, and we're projecting an extra 3.4. And then I hear you talk about PBMs and us consolidating and so on and so forth. What I basically need to know as a superintendent, because here's what I'm going to say. We can separate insurance from some of these initiatives as far as teacher salaries, because the cuts that we made at central office and the cuts that we're going to make in schools are not going to fund insurance. The cuts that are going to be made at schools and at the district level is going to take care of teacher salaries and teacher incentives. We're not going to continue taking away from kids. We're going to continue to make sure that we're pouring into the right resources. So I'm going to go back to my original question. $10 million projected deficit next year. All of the different things that the board did pass or did not pass, based upon the PBMs, based upon everything else, you're saying that it's still going to be $10 million that we're going to have to take out of general fund or somewhere, one-time money, and put into this fund?
No, sir. I understand your accounting. What we came back with was at our meeting this past week, so we estimated what your cost is going to be next year. And I can take your cost, what we think your cost is going to be this year. And let's just say, for example, that next year's cost would be $69 million. And this year's cost right now we know is going to end up to be between 66 and 68. The difference of what we're saying is your cost between this year and next year is that 69 and that 66 or 68. I hear what you're saying as far as deficits. You guys pulled some money over in the past. If you're wanting to make up for your previous deficit, that is not funded into that number. And I understand that's not what you're saying, but I just want to be clear that you moved 6.6 million over last year. And so we're not saying you have to move another 6.6 million as long as you understand what you spent last year is going to be the minimum. Your total spend this year, your total spend this year would be your minimum for next year. You are under trend as far as what your renewal is.
Okay, so I'm gonna be very clear.
Okay.
That we're preparing a budget
Yep.
for next year, 25, 26. And I need to know if we're gonna fall short in this health insurance plan or not. And if you can say what that shortness is, I can then bring it to this board, because everything that you see here, that charter schools, teacher salaries, we're gonna deal with those things. Charter schools, all we're gonna do is we're gonna cut personnel. The cuts that we had at central office, the cuts that we're gonna have at schools, that's gonna make up some of the things that we're gonna do. We're gonna be creative with our funds, but I'm just really concerned that this board has made decisions as far as changing certain things as far as benefits. We've had people move over. We're going to actually have PBMs that are gonna be combined. I need to know for our accountants and our CFO, what is the number that we need to be aware of that we're gonna have to deal with in 25, 26?
Mr. Superintendent, I presume that the $3.4 million that Mr. Anthony's got in here comes from Gallagher's report of an additional $3.4 million. So if that's the case, Tony, what we're going to need to speak to, and maybe not today, but very soon, is that next year's budget, unless we have a decrease in spending in claims and pharmacy, is going to include a nearly $8 million deficit. So yes, we will have to continue to send $6.6 million over. Now, I understand that part of it is potential insurance premium adjustment. And what I don't want to see is that. Now, I get it. I need you guys to come back with your professional recommendations. But what we're trying to work towards long-term is a strategy that reduces the cost of insurance and prescription drug in order to not have to increase premiums and continue to move funds over from general fund. So, in fact, we are going to have, unless it decreases, unless the costs decrease, we're in fact going to have to move 6.6 million over, or we're going to have to figure out what that 6.6 million means in increased premiums. And that, I understand that may be one of your recommendations, and please bring it. That's what you get paid for. But that's not the long-term goal and strategy for us. And so I'm concerned about this. There's people out here that do not believe us when we say that there was a $7.9 million deficit. It's a fact. So what we need to do is figure out how we're going to close that, because just like the superintendent's adamant about not using the cuts he's made toward insurance, and we see the trend insurance increasing, I'm just as adamant about stop pulling money out of the general fund to fund this. So
we are not, one of our solutions is not to increase employee premiums. That's not what we're saying to make up that difference. When I'm talking about premiums, I want to be very clear. Your premiums as they are set right now, the total premium, the amount the employee pays and the employer pays, brings in about $57 million a year. And you're spending, you budgeted this year that you knew you were going to spend at least, I think it was $66 million. And so therefore you said this was a premium, and then you transferred some money from your general fund. You also ended up having some money in the fund balance. What all we're saying is that for next year, the premium should be set to the appropriate budget, and that would be, at this point, we're saying around from our conversation we had, this isn't our official presentation yet, but we're right now looking around an estimate of $69.5 million, okay? And therefore, what you have set your premiums to is not enough. So when someone goes out on COBRA, for example, they're not really paying the full amount of cost of the plan. So if we set the premiums correctly, that piece happens. So once we set the premiums where they are, what we're saying is if everyone if the premiums are being paid, that's being put into the fund, and the expenses go out, that should be about a net of zero. Now, what I am hearing, what you're saying is that we do need to decrease that cost so that we can hopefully not continue to have to either increase the premium or the budget, and that is 100% received on our end. We brought some of those strategies last year. We're going to bring some of those back. You adopted a lot, and I will tell you the number would have been higher had you not adopted the things that you guys did adopt. One of the biggest savings we know that is going to take place is going to, we're anticipating is the pharmacy benefit management contract review. And then also, of course, you know, we're going to be working on doing a network discount analysis in addition to the TPA market check. So those, and then additional, we'll be bringing some plan design ideas to hopefully make find some savings in those areas as well.
It's only a question I have, and I guess it goes around teacher salary. If we bump to 50,000 as the base, what does that rank us in the parish? I mean, in the state, my parish, do we know about? Sure. And the other question I have is, with the potential constitutional amendment that's coming with regards to teacher pay, are we going to reflect that number if that constitutional amendment passes?
Yeah, so we're not taking that into account.
Okay.
I mean, the vote hasn't taken place, and if it does pass, and by all means, that's an extra $2,000 for teachers. But the $50,000 that we're looking for is taking our original price of 47,600 and moving it up to 50,000.
Fantastic, thank you.
It would move us to number 18 in the state. We're currently number 29.
All right, Mr. Superintendent, you got anything else? Committee members? All right, that being said, with no further items on the agenda, this meeting is adjourned.